Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Done deal. The US and Iran say they have reached an agreement to halt the war and reopen the Strait of Hormuz, with plans for a Friday signing. But key questions remain unanswered. Oil slumps and global stocks and bonds rally on the deal as traders reduce their bets on Fed tightening. And G7 leaders prepare to meet in France as attention turns to the next steps in the Middle East. Well, a very good morning. We start the week with the news that we have all been waiting for months. A Middle East deal on the prospect, and not quite in time for President Trump's 80th birthday, but very much in time to set markets off on a high this week, even with details scant. So you can see stocks rallying around the world, futures as well. Japan's Nikkei 225 heading for a record close. So Asian stocks already up 3.1%. European futures up 1.7%, and S&P E-minis looking for gains of 1.25%. Flip the board cross-asset, you can see oil is down to a 3-month low. Brent down nearly 4.6% to $83 a barrel. And we have yields down across the curve on the lower inflation expectations, but particularly yields lower at the front end, as traders now price about a 60% chance of a Fed hike before the year ends, down from 80% on Friday. So the 10-year down 5 basis points at 442. And we've got Bitcoin at the highest in nearly 2 weeks. 65k a token is where we're trading right now. In terms of the risk events this week, it's a big one for central banks, kicking off with the Bank of Japan tomorrow. Governor Ueda not expected to be present due to his recent hospitalisation, but that's not expected to stop a well-flagged rate hike to the highest level since 1995. Then we have Kevin Warsh's first Fed decision as chair on Wednesday. His communications really in focus as rate holds are expected both from the Fed and the Bank of England the next day, which this side of the pond puts the spotlight on the politics. We, of course, have the Makerfield by-election here in the UK, which if the Mayor of Manchester, Andy Burnham, wins a seat in Parliament, he'll be a step closer to toppling Keir Starmer as Prime Minister. But if Burnham loses to Reform UK, it could sound the death knell for the Labour Party. It's all to play for. Let's set you up for the week ahead. We begin the week with the US and Iran having reached an interim deal to end hostilities and reopen the Strait of Hormuz. Officials from the two countries are set to meet in Switzerland on Friday to formally sign the agreement. But no text has yet been released by either side, including on the fate of Tehran's nuclear program. Let's get more now from Bloomberg's Abir Abu Omar, the anchor of Horizons Middle East and Africa. Abir, good morning. Has Trump capitulated, one might ask? What are the terms of the deal?
Good morning, Lizzie. Look, a good day in the Middle East, with caveats, though. We have to bear in mind that the details of this MOU are still not prevalent to us. We'll know more about it once the two sides meet in Switzerland, as you have mentioned, and sign the deal on June 19th. Now, what we know from leaks across media over the past 2 days or so is that the details in this MOU provide some of the concessions that we've been speaking about over the past couple of months or so. We still don't know, however, if the U.S. had agreed, for example, to giving Iran its frozen assets or lifting those oil sanctions. Both sides, after the announcement of this agreement, have come up with, yet again, conflicting statements, Lizzie. Iran saying that it has beaten, quote, the enemy. The U.S. saying that Iran had given in, and that President Trump had said that Mujtaba Khamenei, the supreme leader of Iran, had agreed to dismantle the nuclear weapon. But we spoke earlier in our show, Lizzie, with Alan Eyre, who's a former U.S. diplomat who was actually in charge or part of the negotiations under President Obama when it came to the JCPOA. And he told us that Iran is not going to dismantle its nuclear infrastructure. Have a listen.
It will lead, best case, to a prolonged ceasefire, but certainly the Iranians, for one, will still see themselves on a war footing. They will still remain convinced that Israel and the United States seek to topple the Islamic Republic of Iran, They will try to rebuild their defense industrial base, their missiles, their rockets. The new, more militarized and more hardline Iranian leadership that we put in place by killing the old one could well seek nuclear weapons.
So you heard that, Lizzie, the nuclear infrastructure, a big part of the negotiations between Iran and the United States. What some U.S. diplomats, including Allen, think is that Iran is not going to bow down when it comes to its nuclear capabilities. Now, what we know is that over the next 60 days, once this MOU is signed in the upcoming week, the two sides will be negotiating the biggest sticking point, and that is Iran's nuclear program. Now, President Trump did say that if Iran does not come to the table and agree on his terms, that military strikes could actually happen again. So that's what I mean when I say there are still a lot of caveats attached to this. It could all fall apart because there are still some sticking points that have not been discussed, Lizzie.
OK, so we could be back to military attacks within that 60-day negotiation period a bit. What else, apart from the nuclear file, is going to be discussed in this next phase?
Right. So look, immediately what both sides have agreed to is that the Strait of Hormuz would reopen as soon as this deal is signed, making way for those ships and tankers that have been stranded since late February to pass through with the much needed crude shipments and other shipments as well. The other few things that we've heard, for example, from our sources include some U.S. sources have told us that the U.S. will start giving Iran some frozen assets if Iran comes to terms with some of the U.S. demands. So it'll be a sort of reward, a reward in sort of in return for Iran giving in to U.S. demands one by one. And then the most important thing would be coming to the table and discussing the nuclear program. President Trump, again, already said that Iran had agreed to completely destroy its nuclear dust, as he calls it. Iran says not really. And so we'll have to wait and see what happens over the negotiating phase when it comes to the nuclear component per se. And then the most important thing that was happening just hours before this agreement is Israel in Lebanon. Israel had attacked Beirut just hours before the agreement was signed, Lizzie, or before the agreement was reached. And that, according to some of our sources, had led to a delay in the agreement actually reaching. President Trump telling the New York Times earlier that Benjamin Netanyahu of Israel has proven to be very difficult, and that is something else that we'll have to wait and see if Israel continues its military actions in Lebanon. Some caveats left. We'll have to wait and see what the G7 meetings gives us, Lizzie.
And indeed, we'll have a preview of those G7 meetings with our chief correspondent for Europe, Oliver Crook, later on in the programme. But for now, Abir, thank you for the update. That's our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Well, as she says, the reaction in markets comes predominantly in the oil space. We're sinking for Brent, down 4.5% on this breakthrough in the Middle East, with expectations that it could ease the global supply crunch that really has rattled energy markets. Let's go now to Bloomberg's Stephen Stapczynski. Stephen, good morning to you. It looks like at least one LNG tanker is already heading to the Strait. You've got European natural gas prices as well falling. Oil prices falling, as I say, too. Are traders getting ahead of themselves, though, given that we've got, as Abir says, so few details of this deal so far?
Yeah, I mean, this does feel to be sentiment driven. I think there are a few things that the market is kind of pricing in, which is that there won't be an escalation from here. The fact that there has been some sort of MOU does indicate that it's unlikely that you're going to see, at least immediately, a flare-up in tension between the U.S. and Iran. And even when you did see the flare-up last week and the week before, where there were some tit-for-tat strikes, as well as Iran striking Israel, you didn't see that flare-up into a wider conflict in the region that resulted in Iran targeting, for example, oil refineries, LNG export plants, those sorts of things that were really a hallmark of the early days of the war in March that led to prices for oil and gas rising much higher. So you are seeing this reduction in prices, European gas down 5%. You have the LNG tanker kind of going through. This is the only ship that we've spotted oil or gas product going through at the moment. Maybe they're testing them waters. It's really unclear the story behind that. It's clearly being watched very closely by the market, though. That all being said, even if there is a wider decision or deal that will open up Hormuz, and you do see traffic going through, ships allowing their ships to go through that waterway, there is still a lot of question as to how quick it will take or how much time it will take for the traffic to go back to normal levels. I'm talking February 2026 levels. There are some facilities that have been damaged. The Ras Laffan LNG export plant in Qatar, 17% of that capacity is going to be offline for years because it was hit by Iranian missiles in March. There are some refineries that will need to ramp up production. There are some oil fields that need to also increase, and there are also ships scattered around the world that normally would service facilities within the Persian Gulf but have been sent elsewhere because of the closure. So it will take months and in some cases years for some facilities to get back to normal levels.
Stephen, thank you very much. That's Bloomberg's Stephen Stapczynski out of Singapore on the oil aspect of this story. And of course, it's feeding sentiment in broader markets. We've got Asian stocks rallying on the back of those US-Iran deal headlines. Let's get a flavour of what's happening in markets now with Avril Hong. She's in Singapore for us. Avril, what are you watching this morning?
Yeah, we're seeing Asia stocks rallying hard today. The benchmark is on its best two-day climb since March 2022 amid optimism around the Iran peace deal. You're seeing Japan set to hit a fresh record close. Tech is leading the way. I'll get a bit more into the AI trade in just a bit, but it's a lot to do, as Stephen was just highlighting, to do with the oil slump and how that's reinforcing the narrative that inflation has peaked. So that removes a bit of the risk of hawkish surprises from the BOJ or the Fed this week. And overall, then, that provides a good backdrop for stocks. The BOJ, of course, is expected to hike 25 basis points tomorrow. And after the board, take a look at some of the big movers today. Unsurprisingly, it is the benchmark heavyweights, the chip stocks, that are leading the charge. You're seeing how a lot of them are lifting the benchmark, and it's really the AI trade getting fresh momentum. But it's also worth highlighting how when it comes to the tech sector, they were already in a good mood before word of this Iran peace deal broke because of the SpaceX trading debut that some of our colleagues have been highlighting about on the MLive blog, that it was a sort of Goldilocks scenario. Aside from the tech sector, we're also seeing travel-related stocks, gold counters, those are doing well in the region today. Energy, unsurprisingly, is the outlier. Now, flip the board again. When it comes to currencies, you are seeing a lot of those that were pummeled in the midst of the war. They are gaining ground today. You're seeing the Indonesian rupiah, the Philippine peso, a bit of a turnaround there. And I think also it's worth highlighting that some think for further unlocking of FX gains, investors will need to see evidence of energy flows. Now, aside from that, worth highlighting how dollar yen is still stuck above the 160 handle. So it does give you a sense that Japan might need to do more to reverse the weakness that we're seeing in the Japanese currency. Lizzie?
And of course, we've got that BOJ meeting this week. Avril, thank you very much. That's Bloomberg's Avril Hong in Singapore. Well, still ahead on Daybreak Europe, Anthropic cuts off access to its most powerful models after a US government export ban. We'll look at the impacts on the global tech sector. But first, we'll look at what the US-Iran deal could mean for key central bank decisions this week as Kevin Warsh prepares for his first meeting as Fed chair. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. And this Monday morning, we are risk on in markets. That deal between the US and Iran driving a rally in global risk assets. Stock futures pointing to gains on both sides of the Atlantic. Treasury yields declining on the easing inflation fears. Let's get some analysis now. We can go to David Savage from Bloomberg MLive. So, David, we're still waiting for this deal to be signed. We're waiting for details. And yet we're seeing this euphoria this morning in markets. Are you expecting even more of a market reaction when Trump Sharpie inked signs the paper?
Well, investors are not waiting to unwind some of the trades that were built on a prolonged conflict or higher energy prices. We saw, obviously very sharp declines in crude futures. And of course, the tech trade has certainly been reignited. We saw the Nikkei hit an intraday record high. The Kospi's up 5%. NASDAQ futures are higher. But outside of the familiar tech trade that we've seen, we saw Euro Stoxx 50 contracts. They're up quite sharply, about 1.5%. That's a pretty big move to see in the Asia session. And then if we look at EM equities, outside of Taiwan and Korea, we saw very big moves in the Philippines and Indonesia. That market had been down as much as 40%, and so it's really started to bounce higher. And so this part of the equity rally probably is more vulnerable once we start to see more of the contours of what this agreement actually look like. If it starts to appear that Middle East energy flows are not going to be restored as quickly as they were taken offline, that's where the rally, I think, is probably more vulnerable. But for now, investors are very busy unwinding any trades that were built on a prolonged conflict.
Yeah, and Abu Omar was highlighting the risks over the next 60 days that we could return to military attacks if progress isn't made when it comes, for example, to the nuclear talks. Just when it comes to the bond side, you've got big central bank decisions this week. Already we're seeing traders unwinding Fed hike bets, David. How much will potential peace in the Middle East change the commentary from central bankers this week? Of course, we're going to hear from Kevin Warsh as Fed chair for the first time at this meeting, and it'll be his first press conference, is what I mean.
Yeah, it's interesting. I mean, the deal certainly is unlikely to change the actual rate decisions we see. The BOJ is largely expected to raise rates, and elsewhere, from the Fed to the BOE to the RBA, is largely expected to keep rates unchanged. But as you said, it's really to the commentary. I think coming in, if we had not seen a deal, I think bond investors would have really been listening in to see any dovish commentary, and I think would have punished that commentary quite severely. I think this gives policymakers a lot more flexibility to, again, lean a little bit more towards a wait-and-see approach, particularly from the Fed. And we've seen certainly bond investors start to unwind those pre-deal trades as well. Bond yields really falling across the curves from in Japan and Australia. We saw Treasury yields lower as well. So I think that's certainly similar to the equity side, a bit of a wait-and-see approach, but I think bond investors aren't going to be waiting, and certainly gives policymakers a lot more flexibility.
Yeah, interesting to see your colleague Ben Ram this morning writing that German bonds are going to outperform their global peers at the open, given that inflation in the euro area is the least problematic of the major economies. So we'll watch out for that later this morning. But for now, David Savage from Bloomberg M Live, thank you very much for the update. Well, coming up on Daybreak Europe, voters in Switzerland have rejected a proposal to limit the country's population to 10 million. We'll have more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. And let's turn now to Switzerland, where voters have rejected a proposal to cap its population at 10 million people. There's warnings about economic damage if the radical measure were introduced outweighed concerns about immigration. In a national ballot yesterday, 55% of voters rejected the cap, with some 45% backing the initiative. Joining us now is Bastian Benrath-Wright, Bloomberg's Swiss economy and government reporter. Good morning to you. I mean, 54-45, doesn't that underscore the strength of populism in Switzerland, Bastian? What are the implications of this vote going forward for policy?
Well, the message to draw from this is definitely that immigration is and will stay a polarizing issue in Switzerland. That is definitely the takeaway. But on the other hand, Switzerland dodged a bullet here. So the big Swiss corporates, Roche, UBS, ABB, and so on, they will keep their access to foreign labor. They can still recruit workers abroad, which they, before the vote, have said is absolutely vital for them. So the economic fallout is averted. But yes, going forward, voters will still ruminate on the issue of immigration.
OK, so Project Fear, the economic argument, won in this case. But where does it leave the new deal on relations with the EU that Switzerland's going to be voting on next year or in 2028?
This is the big question. The supporters of the population kept the Swiss People's Party, which is the right-wing party here and the biggest party in the parliament also. They have vowed to fight this deal, and they have also vowed, after the defeat they suffered yesterday, they have vowed to hear the Swiss people's concerns and continue to fight against what they say is misguided immigration policy of the country. So when this deal, which is really fundamental to update Switzerland's relations with the EU, when this deal will come to the ballot, you said it, either next year or in 2028, then it will be very much a controversial fight, and it is very much a possibility that voters will scupper that deal, which then in turn will have significant diplomatic, political, but also economic fallout for Switzerland. So we'll wait and watch what happens in that vote.
Well, just give us a flavour of that economic argument. What could we have seen had this vote gone the other way?
So there was a government commission study which said that if you had introduced the cap on the population, then economic production, GDP, would have been 12% lower by the end of the century. And much of that is, as I said, from this access to foreign labor, which the Swiss economy is dependent on. The thing is, if you look at population growth in European countries, you see that Switzerland has grown much faster than other European peers, which is the reason why this idea of capping the population of Switzerland is running out of room actually came up in the first place. But these are against what supporters told in their campaign. These people are not coming to draw welfare in Switzerland. The biggest majority of those people came because they want to work in Switzerland, because there are just unfilled jobs here, and the Swiss economy needs these workers from abroad.
OK, Bastian, really helpful context. Thank you very much. That's Bloomberg's Bastian Benrath-Wright. Now, let's go to some other top stories we're following for you this morning. The UK and Japan have agreed on a $24 billion investment package to boost Britain's clean energy sector and create jobs. The announcement came as Japanese Prime Minister Sanae Takaichi met her UK counterpart Keir Starmer ahead of the G7 summit in France. And staying with Starmer, the UK Prime Minister is expected to confirm plans to ban children under 16 years old from using major social media platforms, alongside measures to regulate chatbots and set a curfew on social media use for older teenagers. A source tells Bloomberg that the proposals will go further than similar laws in Australia, which introduced a social media ban for teens last year. Well, coming up, President Trump is set to discuss his deal to reopen the Strait of Hormuz at the G7 summit in France. We'll get more on that meeting of global leaders next from our chief Europe correspondent, Oliver Crook, who is on his way to the summit. That's next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Done deal. The US and Iran say they have reached an agreement to halt the war and reopen the Strait of Hormuz, with plans for a Friday signing. But key questions remain unanswered. Oil slumps and global stocks and bonds rally on the deal as traders reduce their bets on Fed tightening. And G7 leaders prepare to meet in France as attention turns to the next steps in the Middle East. Well, a very good morning. Welcome to the programme if you're just joining us. 6:30 a.m. here in London. And we begin the week with the news that we have waited for months. Not quite in time for President Trump's 80th birthday, but nonetheless in time to set markets off on a high this week, even with details scant of this Middle East deal. You've got stocks rallying around the world. MSCI Pacific Index is already up 3.2%, fueled partly by the Kospi, which is up over 5%, up 5.3% right now. Japan's Nikkei 225 heading for a record close. And you've got futures pointing higher on both sides of the Atlantic. Real outsized moves for Euro Stoxx 50 futures, up 1.8% right now. S&P E-minis up 1.3%. And so this positive sentiment going global. Now, it comes back to the cross-asset picture. So flip to that. You've got Brent lower this morning by 4.3% at $83 a barrel. Yields, therefore, down across the curve, particularly at the front end, as traders start to price lower chances of a Fed hike by the end of the year. So it's now a 60% chance, according to the market. That's down from an 80% chance on Friday. And you're looking at the 10-year, for example, down 5 basis points at 4.42%. But the 2 years down 6 basis points at 4.02%. And then I've thrown in Bitcoin this morning because it's at its highest in nearly 2 weeks. 65K a token is where we trade right now. Well, let's also take a look at the front pages this morning. As you would expect, the Financial Times leading on the Middle East, with President Trump saying that the deal to reopen the Strait of Hormuz and extend a ceasefire is now complete. Now we just await the signing. We also have the Wall Street Journal leading on this potential breakthrough between Washington and Tehran after nearly 4 months of fighting and all the devastation that has caused. Meanwhile, if we turn to Les Echos out of France, they lead with the Trump quote, "Let the oil flow," as attention turns to the peace protocol that's expected to be signed in Switzerland on Friday. But you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find by going to DAYB Go. Well, of course, the Middle East news is the backdrop to the annual G7 summit, kicking off today with President Trump joining the leaders of the UK, France, Germany, Japan, Italy and Canada in the French resort town of Evian-les-Bains. Talks are expected to be dominated by the announcement of the US-Iran deal to reopen the strait. And as world leaders head to the G7, our chief Europe correspondent, Oliver Crook, is also en route. He's on a bus winding through the French Alps, and he joins me now. So, Ollie, just talk us through how this potential peace deal for the Middle East is going to impact the talks at the G7. Good morning.
Yeah, good morning, Lizzie. As you can imagine, it's a thing that's been hanging over this G7 meeting, this war with Iran. Will they, won't they have this sort of signing? And, of course, it's a thing that's been hanging over most of these economies for the last few months. So I think for the leaders here assembled over the next couple of days in Evian, it's obviously a huge sigh of relief. There are, of course, a huge number of questions that still remain about the sort of contents of the deal, the supervision of the deal, and, of course, the architecture of the deal, and also going forward, what will this look like? So I think that for the leaders, when they get to speak with Donald Trump, will arrive here at about 5 p.m. Later today. He'll have a meeting with the other heads of state and Emmanuel Macron, and then go into the sort of full agenda for the next couple of days. It will be, of course, pressing the President of the United States for more information. But as ever with these trips from Donald Trump here to Europe, he usually comes with his own ideas of what he will demand from the Europeans. And I think that we'll have a big conversation about that. There have been some efforts put forward. We've heard from Emmanuel Macron really from the beginning of this war, saying that the Europeans will have a role, but only once we have a ceasefire in place. If we do, in fact, get the ceasefire in place and the signing on Friday, the question will be, what is Europe's role? We've had conversations about potentially getting a demining task force joined by a number of European leaders. But, of course, what will be also very interesting, very important, is for the sanction relief that is apparently part of this deal through the monitoring process. Of course, the Europeans have sanctions on Iran as well, but we had a statement out from the E4, from the UK, France, Germany, and Italy, saying that they are prepared to relieve some of those sanctions in accordance with this deal and with some of the monitoring. So, of course, there's going to be a ton to talk about. We should say the Qataris will be here, the Egyptians, as well as the U.A.E., and that is going to be part of the massive conversation here. So you have people who obviously have sanctions on Iran, but again, you have some regional leaders in the Gulf and around the world that also will be really crucial to the architecture of this deal going forward.
And Ollie, is it fair to say that the UK Prime Minister Keir Starmer's diplomatic credibility is diminished as we head into this meeting because of the domestic political agenda? Of course, you're going to have all sorts of meetings between world leaders this week.
Yeah, absolutely, Lizzie. I mean, I think it's very fair to say if you can't throw your weight around at home, it's very hard to throw your weight around on the global stage. And for Keir Starmer, particularly on this question of defense, with the defense secretary resigning because unsatisfied with some of the defense spending and the plans to reinforce the defense of the United Kingdom, that is, of course, one of the big issues for Donald Trump about spending for NATO and really taking it very seriously. And if the UK can't get it back together at home on that, it's going to be a little bit more difficult to project some of that strength on the international stage. So there is obviously the relationship between Donald Trump and Keir Starmer, which is front and center. But Lizzie, since the last time Trump came here back in January, remember when he was here in January for Davos, he was still talking about invading Greenland, basically. There has been a real degradation in some of the bilateral relationships between Donald Trump and some of the other leaders of Europe. You have it with Giorgia Meloni coming to the sort of rescue of the Pope when Trump was being very, very critical of him, as well as not giving him permission to use military bases in Italy in order to strike Iran. And of course, the great blunder, depending on who you ask, by Chancellor Merz, basically saying that the Iranians were humiliating Donald Trump. These are leaders that are going to be meeting with the president once again after all of those sort of disgruntled moments. And of course, there is Emmanuel Macron. He is going to be hosting, and of course, he's got that critical dinner with President Donald Trump in Versailles on Wednesday.
OK, well, you'll let us know what's on the menu. But for now, Ollie Crook, thank you very much. That's our Chief Europe correspondent from the bus on the way to the G7 summit. Thank you. Well, let's also stay with geopolitics, but turn now to Ukraine, where cities including Kyiv came under Russian drone and missile attack this morning. It comes hours after Vladimir Putin and Donald Trump held a phone call discussing international issues and negotiations between the US and Iran. Let's get more now with Bloomberg's Rosalind Matheson. So, Ros, despite that Trump-Putin call yesterday on the president's 80th birthday, still this morning, Ukrainian cities coming under Russian fire. Just bring us up to speed on the latest strikes this morning.
Well, that's right. So quite widespread strikes in the wee hours on a number of Ukrainian cities, mostly in central and eastern Ukraine. The capital, Kyiv, obviously, but also Kyiv, which is the second biggest city. The mayor of Kyiv saying that there was a strike on a historic former monastery in the centre of the city, a number of apartment buildings on fire, almost 150,000 people without power. And of course, as you were saying, this came shortly on the heels of this phone call between Donald Trump and Vladimir Putin. The Kremlin characterized that call as full and frank. According to them, Vladimir Putin did raise the issue of Ukrainian strikes on Russia. Russia, of course, says that Ukraine is targeting civilian sites. Ukraine says it's only targeting energy infrastructure inside Russia, chemical facilities, all designed to try and weaken Russia's oil economy and its own supplies. But obviously the message coming from this is that despite those phone calls between Donald Trump and Vladimir Putin, Putin doesn't really see a need to ease up in his war in Ukraine and certainly seems to be pushing on regardless.
And how much progress is expected to be made on Ukraine at the G7, Ros? We were just discussing with Oliver Crook the weakening of Prime Minister Keir Starmer here in the UK because of domestic politics and, of course, the controversy around defence spending by the UK.
Well, it probably will come onto the agenda, but it's the question of how high, because obviously all eyes will be on the Iran issue and the question of the details of this agreement. We know very little about it. Are European leaders, are the G7 leaders trying to coax details out of Donald Trump on that deal and what next in those arrangements? So a lot of focus probably on that. There'll be conversations also around trade, trying to understand where Donald Trump's head is on trade at the moment, the latest threats. We have reports today that Donald Trump is again threatening heavy wine tariffs on France, for example. So Ukraine might come in underneath that. Of course, we know that Volodymyr Zelensky is expected to be there at the G7. He may be trying to carry a message to Donald Trump, which is, OK, so you say you've now reached a deal on Iran. Can you turn your focus back to Russia's war in Ukraine? Of course, Donald Trump has not had much time at all for that of late. If he can't get a deal pretty quickly, he does tend to lose interest. And so he's pulled away from that. they try and get him back. Now, if Iran is sorted in Donald Trump's mind, can they resurrect attention on Ukraine? And that's probably going to be the message from the European leaders there at the G7 meeting and Zelensky himself. The question is, how high is it going to be on the agenda and how much conversation will there be around it?
Ros, thank you for the update. That's Bloomberg's Ros Matheson. And I want to get back to the Middle East because we've got some breaking lines from Ben Gvir, who is, of course, Israel's national security minister, saying that we must not compromise on dismantling Hezbollah, the Iran-backed group, of course, in Lebanon. We are not bound by the U.S.-Iran deal, he says. And of course, we know that the tensions between Israel and Lebanon, to put it lightly, the fighting between the two had been part of what was holding back a US-Iran deal, hence why it wasn't able to be agreed in time for President Trump's 80th birthday. And so this could threaten that broader agreement, perhaps. We had President Trump telling Israel to stop these attacks in Lebanon because it was risking the deal. So this is already fragile, as we've heard from Abir Abu Omar earlier on this morning. 60 days of talks expected to happen, kicking off in Switzerland. But is this going to be another risk, in addition to the fact that they've got to make some agreement, President Trump says, when it comes to the nuclear file, or risk more US nuclear attacks? So that, the latest from the Israel National Security Minister, Ben Gvir. Well, coming up on the programme, corporate climate commitments are on the rise in global Fortune 500 companies. This is according to research from Climate Impact Partners. We'll speak to their chief executive officer next in the context of the Middle East war. That's next. This is Bloomberg. Climate commitments have tripled since 2019. 72% now hold at least one climate target, up from just 24%. This is according to research from Climate Impact Partners, who've published their 7th annual analysis of Fortune Global 500 companies. And I'm pleased to say, joining us in studio for more is the CEO, Sheri Hickok. Really good to have you with me, Sheri.
Thank you, Lizzie.
So this report basically is saying that corporate climate ambitions accelerating despite the political backlash, and we know where that emanates from. How do we know that this just isn't a big PR exercise by corporates when you've got global emissions continuing to rise?
Yeah, well, first of all, thank you for having us. We're really proud of the report that Climate Impact Partners has released. And I think what we see in the continued growth in the commitments is that it isn't a short-term gain. So as you said, corporate commitments are up 72%. We have now 72% of the global Fortune 500 with at least one climate goal. That's 3 times since 2019. But they're actually taking real action. In the last 3 months alone, Climate Impact Partners has had 3 major milestone announcements with these companies as they're starting to engage and take action towards achieving net zero pathways.
So the targets are translating into action, but many of the targets stretch out to 2040, 2050. Doesn't it just show that it's a convenient way for today's management teams to make promises that maybe they won't be around to deliver?
Yeah, I think it's a great comment. But what I would say is the action is starting to play through. So first and foremost, we need to set a credible climate goal. And that's what we're seeing corporates do. The second is they need to start to reduce their emissions. We know this is a challenging exercise, but then that's where the carbon markets come in to help them achieve these goals. So we've seen in our own data at Climate Impact Partners an increase of 123% in the last 12 months of corporates actually starting to engage in the carbon markets for the long term. So they're making multi-year commitments into the future. Mm-hmm. So it's not just about setting a goal today, they're actually taking action.
And of course, we know that the Iran war has focused minds, shall we say, on the world's reliance on fossil fuels. Now there's a deal. Is it going to slow momentum in turning to energy alternatives?
I think it's really interesting. I think one of the most important things that we need to remember about the climate challenges we have in front of us is they're not short term. Mm-hmm. So regardless of what's happening today or even tomorrow, we need to keep this in focus. And we know it's challenging for governments to where they spend their time. But this is where we need real private action to step in and fill that gap and take accountability.
And if we sit here in 5 years' time and many of these climate commitments have been missed, who do we hold accountable? Is it the governments? Is it the corporates? Or is it the carbon market industry that's helped design some of these strategies?
I think if we sit here and we missed fundamentally the goals that have been set out, it really is less about just holding people accountable, but along that time frame to say, how do we get back on track? How do we use the tools at hand? Today, the carbon markets are a real tool that is driving increase in outcomes, increase in that action, and we see it. So I'd rather say, instead of holding them accountable, how do we help encourage them to continue on the pathway? It's a challenging path to hit global net zero, but that's what the data shows these corporates are signing up for.
But don't companies who help companies access carbon credits have a vested interest in keeping the offset market alive, regardless of whether it delivers meaningful emissions reductions?
I think the challenge would rather be that there's clear structures around the carbon markets now that are demonstrating high quality credits. There's frameworks in place, there's standardization, and they're being accepted and endorsed by global governments, by companies, and by the market. So the market isn't standing alone. It's really integrating into the ultimate climate solutions as a tool to achieve global net zero.
Okay. Sheri, great to see you. Thank you for coming in early this morning. That's Sheri Hickok, CEO at Climate Impact Partners.
Thank you, Lizzie.
Well, the U.S. government has ordered Anthropic to suspend access to its Fable 5 and Mythos 5 models by any foreign national, citing national security concerns. Canadian Prime Minister Mark Carney says that the ban underscores the risk of depending on just a handful of powerful AI tools. And we can get more now with Neil Campling, Bloomberg's senior strategist. He joins us now. Neil, just talk us through the national security concerns that relate to Anthropic's latest models, Fable 5 and Mythos 5.
Raises security concerns. And it's because the Trump administration said that they have become aware of a method of bypassing or what's known as jailbreaking the models. So a way that bad actors could wait to sort of get into the vulnerabilities within the platforms, which is called a potential national security risk. Now, it's a dramatic standoff once again, really, between the government and Anthropic. Anthropic said it was minor vulnerabilities, and it said that it ensured that it had safeguards in place, and that really that some of the safeguards were kind of the customers that complained were too broad, and preventing them from using the tools that were available. So it's definitely a point of tension, if you like, in this particular sort of latest AI models. But they've had to obviously disable access not only for foreign companies, but also for foreign national employees as well. So it's a latest development, and it came only 3 days after these latest AI models were released by Anthropic.
And what does it mean for AI deployments from other companies, Neil?
So, of course, there is, if this standoff becomes a longer term issue, then it could obviously impact the potential for the growth rates that have been substantially high, obviously, for Anthropic and other companies. The impression is that it's unlikely that the White House will extend the restrictions, as far as we know so far. And it appears that potentially the reason this has happened is because the government are kind of implying that Anthropic refused to fix these vulnerabilities. So Anthropic is saying that other companies have developed models with similar risks, and the White House is kind of suggesting that actually it's Anthropic's refusal to make the fixes. So I suspect that there'll be a sort of a change to the coding that will enable Anthropic to allow for those latest models to be reused again, because you need that high growth and high usage to continue to prevent, I suppose, other companies overtaking Anthropic with their technology tools.
Neil, I just want to flip to SpaceX because I'm seeing it gaining significantly on TradeGate versus Friday's closing price. And we haven't had the chance to analyse the SpaceX IPO. So your key takeaways from that, because many talking about it being a Goldilocks outcome on the deal.
That's a great way of framing it, I think, in that the stock didn't go too far too quickly after that came to market. And the fact is we have a huge size of deal, obviously a very large company now that has a lot of things to execute to play out longer term. But I think the fact that the control of the IPO process was really well managed by the banks. The stock didn't go too fast either way. So that's very encouraging. And obviously with that huge amount of money that's been raised, they now do have the ability to spend significantly on the AI investment. And as we know, there are many companies that benefit from these billions and billions of dollars that are being unlocked to spend on AI infrastructure. So I think it was really well managed, to be fair.
OK, Neil, thank you very much. That's Bloomberg's Neil Campling. And we've got plenty more coming up on the programme, including some terminal charts on that SpaceX IPO. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:55 a.m. here in London. And the big news of the morning to start off the week is that the US and Iran have reached an interim deal to reopen the Strait of Hormuz. Now, this is how it's playing out in markets. As you would expect, oil falling both for WTI and Brent this morning on those optimistic headlines. Of course, we've had optimistic headlines coming and going over recent months, but you can see that the volatility in the oil market is falling here as well as a reflection. This is palpable. Now, flip over the board and we ask now where it leaves the Fed, because we've already seen traders pairing bets on a Fed hike by the end of the year. 80% was what was priced on Friday. Now it's 60%. And of course, we've got Kevin Warsh's first meeting as Fed chair coming up this week. Now, you can see from the five-year inflation swaps here that the market is pricing when a deal is going to be signed, not if. This is the white line. And we've already seen, as I say, traders pairing bets. You can see here the recent Fed speak. The level of hawkishness on the FOMC is the yellow line here. It's been pretty cautious, staying there, plateauing. So we'll look out for the tone of the commentary as well. Well, coming up is the opening trade. Anna Guy and Tom will take you all the way to the European cash open. That's next. This is Bloomberg.